All right, so today, let's dive into the world of dividends, specifically AT&T. They've been making some big moves lately, and, well, anyone looking for reliable income, AT&T often pops up on that radar. We're going to be taking a deep dive into a recent Motley Fool analysis. We want to see if their stock, is actually worth your investment right now.
Yeah, and it's a pretty interesting time to be looking at them, right?
Yeah.
They're really streamlining that business model, and that obviously has huge implications for anyone eyeing them for, that dividend potential.
Absolutely. And speaking of big moves, we got to talk about the elephant in the room. AT&T just unloaded 70% of their stake in DirecTV. That's a $7.6 billion cash infusion. It's pretty clear they're making a strategic exit from this whole pay TV scene. What's your take on that?
Yeah, it's more than just about the cash, although that's definitely nothing to sneeze at. This is about, it's a strategic shift, right? The pay TV market, it's a tough business. It's super competitive, potentially shrinking. So by stepping away from DirecTV, they're simplifying their portfolio, mitigating their risk, and that's always a good sign for investors.
Makes sense. Less risk, more focus. But let's not forget, AT&T, they're carrying some serious debt, over $130 billion. With interest rates as high as they are right now, that's a concern, right? So how does this DirecTV deal play into all of that?
Yeah, no, you're spot on. That's a significant amount of debt. But here's where that DirecTV sale gets really interesting. $7.6 billion, that's not chump change. This is a golden opportunity for AT&T to really start chipping away at that debt. Think about those interest payments. So by reducing that debt, they're not just getting financially healthier, it's also, makes them more attractive to investors, right? Stability, dividend growth, that sort of thing.
Which, of course, leads us to the big question on everyone's mind. Is a dividend hike on the horizon? That's what we really want to know, right?
Exactly. And the Motley Fool seems to think so. And honestly, there's some pretty compelling evidence to support that. But to understand why, we need to take a look at AT&T's payout ratio. Right now, it's sitting at 64%.
Now, hold on a second. I think it's super important for our listeners to really grasp this whole payout ratio thing before we go any further, because you're listening to this, you want to make smart decisions, right? So to break it down, the payout ratio, it basically tells you what percentage of a company's profits they're paying out as dividends. Now, a higher ratio might seem fantastic at first glance, right? Bigger dividends, who doesn't love that? But it could also be, a bit of a red flag. It might mean the company's stretching themselves a bit too thin, and those dividends, they might not be sustainable in the long run. We want those checks coming in consistently, right?
Exactly. It's all about finding that balance. And with AT&T, 64%, it means they're giving a good chunk of their earnings to shareholders. But, and this is key, they still have room to move. They've got that wiggle room, and that's what gets us excited.
Okay, so we see they've got some breathing room with that ratio. But the question is, are they actually bringing in enough cash to support a bigger dividend? That's what it all boils down to, right? That's the million-dollar question, isn't it? A good payout ratio is important, but it doesn't mean much if the company isn't bringing in the cash to back it up.
Exactly. And that's where free cash flow comes in. Think of it like this. It's the cash a company has left over after they've taken care of all the essential operating expenses. It's like their discretionary spending money, for things like reinvesting in the business, paying down debt, or, you got it, issuing those dividends.
So how does AT&T stack up when we're talking about free cash flow?
Well, this is where it gets really interesting. Over the past year, they've generated about $21 billion in free cash flow.
Okay, so $21 billion. What does that look like compared to, what they're shelling out in dividends?
Right. So over that same period, their dividend payouts totaled about $8.2 billion.
Wow. Okay, so there's a pretty significant difference there. It definitely sounds like they've got, some wiggle room to potentially bump up those dividend payouts, right?
Exactly. That healthy gap between the free cash flow and the dividend payouts, it's a strong indicator that they have the financial capacity to increase those dividends if they choose to. And remember, historically, AT&T has been a pretty solid dividend growth stock.
That's right. They've got a track record of delivering for those dividend investors.
They did hit pause on those dividend increases for a bit after the whole Warner Media spinoff. They had to readjust that dividend back in 2022. But this DirecTV sale, this could be the catalyst to get them back on that dividend growth track. A lot of telecom companies, they use dividend increases strategically, It's a way to attract and retain investors who are looking for that steady income, especially when the economy is a little uncertain.
Makes sense, especially considering how well their stock has been performing recently.
Oh, yeah. AT&T stock has been on fire, up 27% this year alone. Investors are definitely feeling more optimistic about where the company's headed.
That's impressive, but I've been around the block enough times to know that a rising stock price usually means a lower yield. So how's that impacting the current dividend yield for AT&T?
You're absolutely right. Stock price goes up, yield goes down. It's a classic seesaw effect. And yeah, we've seen that with AT&T. Their yield has dipped a bit to 5.2% because of that price surge. But before you write it off, think about this.
It's still miles ahead of the average, right?
You nailed it. That 5.2% yield might be lower than it was, but it's still significantly higher than the S&P 500 average, which is sitting at a measly 1.3%. So even with the price increase, AT&T is still offering a very juicy yield in today's market.
That's a great point. So it sounds like the Motley Fool is pretty bullish on AT&T as a solid dividend play. But let's be real, no investment is completely risk-free, right? We always have to look at the whole picture. Couldn't agree more. It's easy to get caught up in all the hype, dividend increase, stocks on a roll. But like you said, no investment is a sure thing. We got to keep our eyes wide open. So for AT&T, what are some of the potential downsides investors should be aware of?
That's the right mindset. Never put all your eggs in one basket. Diversification, that's key. And yeah, while AT&T has a lot going for it, there are always risks. One big one is just the competition, right? The telecom industry, it's a beast. New tech popping up all the time. New players enter the game. Consumers are changing how they use everything. It could all affect their bottom line down the road. It's not just about phone lines these days.
That's a really good point. We're living in a world where, how people consume entertainment, it's changing so fast. Streaming services, they're just exploding. And cable, it's becoming a relic. So how can these big telecom companies, AT&T included, how can they keep up? How do they make sure those dividend checks keep coming?
Right. That is the million-dollar question. It's something every investor's got to think about, especially for the long haul. With AT&T, it all boils down to innovation. Can they stay ahead of the game? They're making moves, right? Ditching DirecTV, that's a big one. But we'll have to see how these decisions play out. The media landscape, it's changing faster than ever.
No doubt about it. So we've covered a lot of ground today. We talked about AT&T's big move away from pay TV, how they're tackling that massive debt, that potential dividend increase that has everyone buzzing, and of course, the competitive challenges they're facing. So where do we land? What's the takeaway here?
I think we're at a crossroads. It's an exciting time for AT&T and really for the whole telecom industry. But there's also uncertainty, right? And that's just part of the game when it comes to investing. Risk and reward, they go hand in hand. We talked about how AT&T is making big moves, strategic decisions to try and secure their future. But whether it pays off, that's the billion-dollar question. Only time will tell.
It certainly seems like they're committed to adapting and coming out on top in this new landscape, which is what makes following their journey so interesting. And, it's a good reminder that the world of finance, it's constantly evolving, especially for those of you who are focused on income investing. So stay informed, do your research, and as always, make sure your portfolio aligns with your risk tolerance and your financial goals. That's all from us today on The Deep Dive.